Is the Indian stock market in a bubble? Now, I'm seeing a lot of people asking this question on social media, asking that what is going to happen to the Indian stock markets. We've seen how it's crashing in the last 1 week, and if it's going to continue, because even the mutual fund managers are getting worried. So obviously, if the stock market has gone up so much and it corrects, the natural tendency would be that people would be thinking if we're in a stock market bubble. Now, let's decode this. So who are these people who are asking this question? I think most of them are inexperienced because they have not seen an actual crash in the stock market. Because when you see an actual crash, your portfolio bleeds by 30, 40, 50%. Like we saw in COVID, we saw in 2018. People who have not experienced and they got into the bull run from FOMO mindset because somebody else they knew was making money in the stock market and they thought it was very easy, which actually it was. Like 2023 to 2024, like in the wind of 2023 from Q2 to Q3, like Q3 was okay-ish, but from December till now, we've seen stock markets run up so much, especially mid and small caps. And now we are also seeing data of mutual funds sharing that stress test data, which I think is pretty stupid, because if you understand the Indian stock markets, you know that the free float available in the market is not too high. So I wouldn't know if a mutual fund that has a 5-day, 10-day, 20-day, 30-day stress day, a liquidation period would actually materialize. Because when the market crashes, you don't know your exit point, because there wouldn't be any buyers, especially in a small cap, because when we see it open on a lower circuit, you can't exit. But the regulators want them to show these data points to help investors understand the liquidity ratio and all of these fancy things that I don't understand. I think most of the people who are new to the markets are worried, which is why we are seeing a lot of these headlines in the market. And when SEBI chairman comes on the media channels and says that we are seeing some froth in small and mid caps, which is quite true. I wouldn't say we are not in a bubble, because like stock in the segments like SME, like which is unreasonably high. Like I'm one of the most cautious investors when it comes to SME market, and I've been saying since like September, October last year. I couldn't understand it back then. I still don't understand it now, even though the SME market has run up so much. Like I did a podcast with Neeraj Shah from NTV Profit, and he shared the same ideas. But so I think there are a few reasons that the market is crashing. So in this video, I'm going to cover everything about the reasons why it's crashing. If you guys don't know me, I'm Akash. I talk about stock markets, business, marketing. I also host a podcast called Business Nerd. Go check out those episodes. I've had some amazing guests from the stock market world. So let's get right into it. Like, what are the reasons that the market is crashing? So first reason that I could think of is like we are entering in the election period. Like in the next 2 months, we're going to see a lot of ups and downs in the market because of elections. Now that's a natural market movement. We might see some days where we see bi-directional moves. Someday it opens up, someday it crashes. That's what we're seeing in the last few days. The market opens in green and then it like closes in red. We are seeing traders burning their hands because their stops are hitting, and we are seeing SEBI chairman warning the market that there's a lot of froth in the market. That's the second reason. And the third reason, I think, is one of the major reasons is like tax harvesting. So in the month of March, we generally see investors making adjustments in the trading accounts, like they book losses, which is called tax harvesting. And I think this is going to continue till the end of March. So I think these are the three major reasons that are affecting the market, and that's the reason the market's crashing. Now, I also have a few data points to back why we are not in a bubble. When I say we are not in a bubble, it is from a general perspective, like from a long-term point of view. If you look at certain segments, it is highly likely that we are in a bubble. So, but you look at in a macro move, we are not in a bubble. So this point that I'm going to share is only related to the macro view. I also enter into the micro view when you speak of small and mid caps. I'll share one data point related to that. And the first data point that I wanted to share is from Edelweiss Mutual Fund. Edelweiss came out with the report and they shared the reason behind small and mid cap rally. So I'll just flash it on the screen. Now you can see that in the last 2 years that we have seen, the data that we have right now is Nifty Mid Cap 150 index in last 2 years. You can see that PE has remained constant. It's less than 1%. So we wouldn't say the growth of PE has happened. But when you look at EPS growth of Nifty midcap, like the midcap companies, it has grown up by 67% in last 2 years. So that is really good. So what we have seen in the last 2 years is not because of valuations being frothy. It's actually the earnings have grown, and the reason that we have this bull market is because of businesses that have grown. So which is based on the fundamentals of companies. So we cannot say that we are in a bubble right now, because the data says that the businesses have grown and the mid-cap stocks have risen by 67%. And the second data point that we have is of Nifty small cap 250 index. We have seen the same thing in this. PE ratio has grown by 10%, but when you look at the EPS growth, it has grown by 53%. So PE expansion has happened in small caps, but the EPS growth that we have is way higher, which says that small caps are a little bit overvalued compared to mid caps, but the earnings have grown by 53%, which is really good. I would say that this is one of the best performing indices globally. When you have 53% of growth business wise, you know that the fundamentals of businesses are good. And that's the reason that we have such a good bull market. So this is one of the most important data points that I could find on small caps. And I think this is going to really help a lot of investors to make informed decisions. Now, the second point that I wanted to share is small cap historical data. Now, this is probably one of the most important data points that you can look at, because when you look at historical data, you understand, you know that there have been a lot of economic challenges that India has faced, and through that challenging time, the markets have run up from that point and they have weathered the storm that we are seeing. Like the current market that we have right now, the storm, like I wouldn't even call it, the markets are weathering the storm. Problem that India faced in the last decade were way bigger in comparison to what we are seeing right now. We might see some problems economy wise because of the rainfall and everything, but by and large, the markets are good. And this point that it says that Nifty small cap 100. Now you see that the monthly data that we have, I'm going to quickly scroll to 2010. You can see the average returns that we have. Like in 2010, it crashed. By 2011, the beginning of 2011, that's when we saw RBI cutting interest rates. We can see early around somewhere around 2011 beginning, we saw interest rates continuously rising, and that's when even the markets were going up. I'll quickly hover to January of that year. So yeah, it's this 2010 and we saw 2011. So you can see over here the markets came down because the interest rates were going up. So I've opened this RBI data. So you can see around 2011 beginning, we saw interest rates rising. Around 2014 that we saw, in 3 years, the interest rates peaked. And what happened after that? So you can see what happened after that. From 2010 till 2014, markets were moving sideways. Like there was not any sort of movement. It was going up and down, like it moved sideways for the next 3 years. The current market move, like interest rates have peaked, and the RBI has guided that they are going to cut rates in 2024. I don't know when, like this is just speculative information that I'm sharing. There was a research report said that like RBI might cut rates by 50 basis points. If that happens, we're not going to hear any sort of headlines talking about if we are in a bubble. We're going to see markets rising from there, because now that we are seeing these headlines of, like if we are in a bubble, that's not going to happen, because most of these people who are saying we're in a bubble are sort of bandwagon people who are jumping on trending news and sharing articles just to get few hit pieces. That won't happen for sure. If we see any sort of interest rates like 50 basis points rate cut in the next few quarters, or at least this year, the markets are going to run up from there. So we're not in a bubble when it comes to that. This data, interest rates were being cut from 2014, went up till 2020. So for the next 6 years that we saw. So you can see the interest rates were crashing from 2014, and till 2020 they went 4%. So what happened to the market in that period? Let me just zoom out. So this is 2014. So this is the point where interest rates started, like we saw rate cuts, and you can see from that point till COVID period that we saw the markets ran up, right? So we are in a bull market from that point. So, and we did see some sort of correction in that 2015 period, because we saw the dollar, there was a problem with US dollar going up, and then in 2018 we saw crash of small and mid caps. So even though that happened, small and mid caps were not doing good in 2018, and we saw correction in 2015. That was like the market went up in the next few years after that crash. We might see some sort of corrections if there's a strong hit on the rupee, and because of the dollar being stronger, because we also have elections in the US market. That may happen. Given that scenario, we are still going to do good, because right now we are in a much better place when it comes to 2014, 2015 and 2018 crash that we see. 2018 crash of small and mid caps is nowhere near that we have right now, because that was extremely bad when it comes to crashes, because the market was not doing good. Small and mid cap companies were not doing good business wise. Right now we are really good when it comes to companies performing, companies delivering on their numbers. And that's what we saw in the data. Like there has been growth in EPS of the overall small and mid cap indices. Now when the RBI cuts rates, that's going to be really good for the market. Given all these situations, we know that the data is good. We know that the markets are going to go up after the elections. Right now we're in a pickle. Like problem persists in small segments, like certain sectors are not doing good when it comes to iron ore. There's problems from Chinese markets, like the infrastructure in China, the real estate industries. The metal stocks are seeing some sort of hits when it comes to the Chinese markets, because Chinese markets are the global consumers when it comes to commodities. In the last few days, like copper is hitting all-time highs, and we saw companies like Hindustan Copper hitting all-time highs. So those kind of movements will happen. Like we might see anomalies in those segments. I think my guess is metal stocks will rise, because the moment that we're seeing right now, Hindustan Copper, there's oil stocks, those are kind of anomalies that we don't see in a general like normal market. That's going to do really well. I'm pretty bullish on commodities. I've shared it publicly, but this video is mostly about sharing where fear in a bubble. A couple of more points that I wanted to cover is fear and greed index. So this is the point that if you're near the markets, you should understand that the market runs on two emotions, that's fear and greed. Right now, we are sort of in a fearful territory. A few weeks ago, actually, we were in extremely greed category. So this is one of the reasons that we are also going to see corrective days, and like that would be a really good opportunity to buy for long-term investments. I think that would be a day that I would look forward to buy some sort of stocks that I'm happy holding for a long period of time. I've shared a lot of ideas on my Instagram, on my YouTube, like go check out those videos. Before the budget, after the budget, I made few interesting case studies as well, and I shared all that information. Go check out those videos if you haven't, by the way. And also said about past bubbles that we have seen. We are nowhere close to 2018 crash, because that was really bad. Like LTCG was introduced in January of 2018, which was not appreciated by the market, and then we saw visa problems in the US, which affected the overall market and the IT indices, and then there were a lot of problems in the US because of Trump hitting India on their import duties and everything. So a lot of auto, IT, a lot of them were affected. Now we are in a fairly better situation, because India is promoting EV industry. We've seen India cutting down import duties on a lot of automakers in the EV space. So that's going to help the overall market. That's going to grow the overall market, and a lot of auto companies will also grow. I've shared a lot of videos on Tata Motors, like go check out those as well. So here's what I'm doing next. When it comes to investing, I've already shared a few videos in the past. I've shared some stock names as well, but I'm going to repeat that. So the few sectors that I'm going to focus on pre-election, during the election and post-election is, like at least for the next couple of quarters is, first one is PSU, then there's PSU banks, IT, pharma, FMCG, and there's one more, that's infrastructure companies in the PSU basket. I've shared some stock names as well in a couple of videos, like I'm going to attach it here. So that's what I'm going to focus on in the next couple of quarters. I'll wait for some commentary from the RBI, try and understand how they think of the market and see what's their outlook on rate cuts. I'd be very happy if they do a 50 basis points rate cut this year, because that's going to be very good for the market. I believe that market's going to shoot up if that happens. I hope I'm right on that front. So that's my market outlook from here. I wouldn't be buying any sort of overvalued small caps and mid caps, and I think that data is publicly available. I don't have to share the names of the stocks. Just look at if the stock is growing by 20-30% on the sales orders and they have healthy operating profit. So those are the simple things that I look at when it comes to overvaluation. So use those ideas, try and correlate them with the current movement that we have in small and mid caps, and I hope you find some stocks to invest in. Go check out my podcast. I've had some amazing guests from the stock market world. Neeraj Shah from Innovative Profit, Mangalam Malu from CNBC TV 18. I've also had a couple of stock market investors as well, like Vishal Mehta from Market Scanner, Alok Jain from Weaker Investing. Some amazing episodes, some amazing insights. You'll find fresh ideas for investments. You'll find a lot of value, a lot of strategies for free. You don't have to pay anyone. You don't have to pay me. All of it is available for free. Go check it out on my YouTube. And I hope that brings you some value, make some money out of it. And that's why I've been making all these videos, to help you guys build your thing. And yeah, that's it from this video. I hope you found this useful. Until next time, peace.